Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So gold no doubt stands in the epicenter of all events, as economical, as political, geopolitical. So it's really very important market to watch for in the current situation. So the perspectives for the gold market still looks rosy. We think that we still stand at the beginning, the eve of the major events, and the previous growth of the gold market is just some preparation for the major trend. It's really because the really big events should happen very soon. So from that standpoint, currently we have no doubts that gold keep rising in a strategical point of view, in a long-term perspective. In the shorter term, there are a few things to discuss. So as you can see on the performance on the daily chart, it was a bit tricky and mixed. So despite the euphoria that we've got on the payrolls report and our prediction, you can see that market has shown sharp reversal on the profit taking process by the end of the Friday, because we talked about this in our videos, that investors are scaring of the possible escalation of the Israel-Iran conflict. And to keep positions for the weekend, especially their profitable positions in the top, it's a bit risky. So that has triggered the massive profit taking in the market. As a result, you could see that market has formed not only the huge high wave pattern, which we'll try to use later, but also nominally market has closed slightly in a red zone. So you could see that was sharp reversal and closed below the opening of the session. That is despite the payrolls report. That makes me think that the short-term sentiment on the market remains slightly bearish. So for the performance for the few sessions, it might be really slightly bearish. But this is not the reason, not on the only reason, actually. So if you will take a look at the weekly chart on the COMEX futures, you will see that, well, due to this sell-off on Friday, we still have got both grubbers. This grubber and this one. If we even suggest that this grubber mostly cancelled by this upper action, although it's not the fact yet, but let's for simplicity suggest that it doesn't work anymore. This grubber potentially from the technical point of view could lead market below the lows right there, which is the 2350 area. As you understand, for the market to drop for more than the $100 contract, it might be some really solid reasons, and probably there will be some kind of the fundamental reasons, just because this is weekly chart. It's not some daily grabbers or intraday grabbers, and this action might be serious. If we return back to the idea of this grabber, it suggests even deeper action somewhere back to the 23 area. So these lows, as you understand, this is important. What particular fundamental event could lead to this drop? It's a big question. I could suggest only one that more or less could be predicted. As we shared with you in Telegram, that rumors suggest that the response of the Iran to Israel will be limited and coordinated. Maybe it will be a bit heavier than it was in April, but it still will be limited. And maybe that may become the reason for a retracement in the gold, because definitely market expected something really scaring. And this conflict, once the relief will come, some sell-off in the gold market will happen. Currently, there is the only reason that I will have in mind for a possible retracement on the gold. Maybe later will appear something else, but currently I see only geopolitical results, because all other stuff, some possible data release in the United States, something else, it hardly will make some significant impact, because actually the Fed policy is already predefined. All data that we will get, payrolls, CPIs, and something else, will now have really very low importance, because the market already is ready for next Fed step, and whatever data we will get, hardly the Fed will change its mind. So from that standpoint, it now takes this information now takes the backseat, and politics and geopolitics come on the first stage. So, shortly speaking, this is, from a technical point of view, might be just a tricky moment and maybe will not work. But we still have to keep it in mind and be careful and watch for the possible signs on the lower time frame. So keep in mind these grabbers, you will get clear bearish context on the lower time frames. We should be ready that the market could start moving in the direction of the targets of these patterns. So returning back to the idea of this high wave, as you know, this is mostly indecision or some pattern that indicates there are some expectations. I'm waiting for something. And where we intend to deal with this in two ways. First, we will trade inside of the range. Second, we will be watching for a breakout out of the range and trading the gold in the direction of the breakout, because usually market keep going in the direction of the breakout. If it will become grabbers, then the lows should be taken out and market should keep going lower, because weekly pattern suggests drop somewhere back to the 2350 area. If upward breakout will happen, in this case, we're stop considering taking short position for some time. But for the truth's sake, you can see that market stands very close to our bottom on a daily chart. From that standpoint, hardly we will get a serious upside breakout. Besides, monthly overbought stands at 25 area. This is not too far from the top. So just $50 per contract. So it's not really very big potential. So the thing that we could suggest here is some wash and rinse of the previous top, some stop grabbing around this area, but hardly it will be straightforward direct upside breakout. Once again, if we will not get any force majeure circumstances from some geopolitical factors. If, for example, everything will go in a scenario that totally opposite to rumors that we have right now in the Middle East. On the follow time frame chart, it's a bit surprising thing, or not quite surprising, but as you can see that mostly everybody forgot about 2420 area, but we talked about it as a potential for taking long position, and you can see it really works nice holding the downside action. So for now, since we have this just as a bottom line of the discussion of the technical background, so for now we have sharp reversal on the top, some profit taking, short-term slightly bearish sentiment, I would say, as I explained what the reasons for that, and technically we have intraday bearish trend. So I think that we could start the week from the considering this type of action. So first, market could show significant upward bounce because upward momentum still stands not bad, rather strong, and I would watching for 2450 area for a possible take in the short position, because this will be agreement resistance. Potentially it might be interesting and relatively strong and safe for taking the short position, giving us chance to move stops to the break even at the first bounce on the first touch of this area. Second, we will get here regardless cheaper to sell. And third, you could see that downside impulse from technical point of view also stands relatively strong. So that potentially later led us to trade this A, B, C, top, D pattern with a deeper downside action. So that's what I would consider on Monday. If rumors will be confirmed that in reality the response of the Iran will be relatively soft, then downside action will become more probable and our scenario will be confirmed. But now this is on a stage of some rumors and suggestions. So that's what we have currently on the gold. Let's keep watching what will happen on Monday.